So Robbie, what is tax compliance and what does that even mean?
Well, there's a lot of sellers out there that don't know what tax compliance is. A lot of folks are now jumping into the market. They're wanting to be a real estate investor. They're buying this real estate to ultimately make some money, whether it's a one property or 10 properties. What we're finding though is that you have sellers that when they do want to get rid of that property, they do want to sell that property, they get to closing, they realize, hey, guess what? I haven't been paying taxes in South Carolina. That's a problem. So just like the federal government, our state South Carolina government is not going to allow you to make money in the state and then leave the state and take all your money with you. They're going to want to get their share. And they know that once that seller leaves the state and they're not filing tax returns, there's really no way for the state to go after them because they don't have any other property to lien. So what they do is they have basically enacted a statute that says upon the sale of a majority of your business assets, there's an automatic lien that attaches to that property. So that's the issue. They get you when you're leaving, and generally it's when you're selling that last asset, you're not paying taxes in South Carolina.
Wow. And so, especially with so many people moving to specifically the state of South Carolina, like how would you go about people that think they're operating the right way as in-state versus out of state? Like, how do you treat that when you're dealing with a client?
Well, I think ultimately you have to ask those hard questions up front. You're going to have to find out, what's their intention in asking them if this is the last asset that they have. I mean, it's all about knowledge, as you know, David, that you have to go through that hard list of questions at the very beginning when you're a realtor, as to what are you trying to do here? And let's get some information. Let's gather that information so we can start dealing with the many issues. And this is just one of many issues. And why you guys as a realtor are so important in the process is to know that these issues exist, gather that information, and then deal with it accordingly, because it comes back to timeframes. Ultimately, when you sign a contract, you have a certain period of time to comply. Otherwise, you may be in breach of contract, which there's a substantial amount of liability associated with that breach. So you got to make sure that what you're signing up for is going to allow you to do everything that you need to do in order to comply.
Yeah. And so what are you seeing? What are these issues at closings? Like the moments that you're finding out on day of closing? What are the real issues that you're seeing people run into?
Yeah, generally it's not so much the day of closing, but it's a few days prior to closing. Ultimately we ask some questions and we get answers, and sometimes those answers, whenever you get closer to closing and you really start pressing them, we find out, well, maybe that's not the truth, or maybe that seller did not understand exactly what they had, or maybe they've done a transaction since they began this transaction that puts them in a category they weren't in before. So it really comes back to what is a business asset, which is ultimately a tax question. Again, I'm not a CPA, I'm not a tax advisor or a tax attorney, but we do identify these issues early on in the process, so they can deal with those matters.
So when you talk about hard questions to ask people up front, and like we tell our clients, call your CPA, let them know that you have the intention to sell this property, just so you don't have a unforeseen consequence. But these hard questions, how should it be done properly? How would you prefer people would get their ducks in a row at the time when they're even looking at a listing agreement?
Well, I think everybody has to have just that, a list. They have to have a list of questions. And as a realtor, or, just that seller has to understand, what kind of seller am I? Am I an individual? Am I a corporation? Am I an LLC? And if I'm an LLC, am I being taxed as an individual or a partnership, or am I being taxed as a corporation? And those are the questions that they have to ask their CPA. They really need to know in advance, what kind of gain do I have on this property? Am I going to have a gain? Am I considered a business in South Carolina? Have I been filing South Carolina tax returns? Because that's the real gist of the compliance issue is South Carolina Department of Revenue wants to make sure that that taxpayer has been filing their tax returns and then paying the amount, of course, due on those tax returns. And what we're finding just before closing is that you get this seller who is an LLC, and maybe this is the only asset that they have, and they find out they haven't been filing South Carolina tax returns. And that's where the problem comes into play, because then they have to go to the Department of Revenue to try to fix this. And their process doesn't happen overnight. Regardless of how much you beg, there's a process there that the department has to run through.
Yeah. So when people are taking this on their tax returns, they may think they're doing it the right way on their federal setup, but when it comes to compliance in South Carolina, they need to be complying in the state of South Carolina as well. If I'm
Absolutely. Absolutely. The state's just not going to let you make money in the state and take all your money and leave. That's just, and the same with the feds. There's issues there. The feds aren't going to, if you're not a citizen, they're not going to allow you to make money in the United States, then turn around and leave the United States and take all the money with you. It's just not how it's going to work.
Yeah, I think people forget that South Carolina is a pretty international market, especially lately. And we're seeing a lot more foreign transactions that people don't have their ducks in a row. And it's really important that South Carolina knows who you are and what you're doing. It's always cheaper, more efficient to be organized up front. Those hard questions, if you had to give me your top 2 hard questions to put on the line up front, what would you say to people?
Well, we could go 2 different routes with this. We could say the hardest top 2 questions, or we can say in the compliance. But I think really it comes back to knowing who is your seller. Has your seller signed the contract, meaning all the sellers? Do you have multiple owners of this property? You have to know who owns this property. And as simple as it sounds, and you would think that would be the first thing that people think of, but a lot of folks forget that, I inherited this property. And maybe there's some other heirs out there that don't live in the state of South Carolina, that need to participate in that transaction. So I think the hardest, and it's really one of the more simple questions, but the one that's overlooked the most is, who is your seller? Yeah. Is it an entity? Is it an individual? How do we have everybody that we need to have involved in this transaction?
Yeah. And I find that the closing process, sometimes people, paralegals and all, they're asking for pretty basic information that later in the game, you're thinking, wow, they're asking questions because somebody hasn't provided this up front. So I would say the best recommendation anytime you decide to sell, if I'm hearing you, is call your CPA and say, my intentions to sell are, I'm going to sell this. Am I okay on your side? And then also to let the real estate attorney know you're also going to sell, just so they can get a head start on making sure that your documentation is ordered, especially if you have to reach out to the state to grab some information.
Absolutely. When you're an individual, it makes it easy if you're living in the home. Generally, if you've lived in a property for 2 years, you haven't sold another principal residence in the last 2 years, and you didn't use it for any type of business purposes, you're going to have some exclusions. $250,000 an individual, $500,000 for a married couple. That's the easy part of it. But I think we're really talking about those folks that don't live in that property and whether they're considered a business or not, because a lot of folks say, well, I own this property and I bought it for investment purposes. I haven't really done anything with it, but I'm not really a business. Well, you may not think you're a business, but the state and the feds may feel otherwise. And you really need to get advice, because when you go to fill out the documentation at closing to declare whether you are a business or you're not a business, most of this is signed, you're signing this under oath. And you want to make sure that when these documents are notarized, that you're giving the proper answers, because you don't want this to come back to you in an audit later when you really do have to have a tax attorney or a CPA to get you out of some type of issues that you could have avoided at the very beginning.
Yeah, I think that's the challenge is people get to the closing table and they're, well, let's fill this out so we can get this deal accomplished. And they might not know they're leading themselves into a potential fraud situation. And then to unravel that later, there goes whatever profit, you were trying to work on a deal.
Absolutely. And, the tax compliance issue, it's simple in process so long as you've done everything up front. You know, if you're an out-of-state entity and you've been filing South Carolina tax returns, maybe you've been pulling in some rental income, the Department of Revenue is going to issue a certificate of compliance if it's your last asset, saying, hey, you filed all your tax returns, you're up to date paying taxes, here's your certificate. And the certificates are good for 30 days. And you're good to close at that point. The problem that really lies is when you don't get that certificate of compliance and they give you that bad news that you're not in compliance. That's when you have to go back to your CPA. And it always seems to be in April when they're at their busiest moment, and beg them to help you get all these old tax returns, even if you've made nothing. And I think that's the key. A lot of folks say, I don't have to file a tax return, I didn't make anything here. Well, the Department of Revenue can't issue a tax compliance letter if you haven't filed. If you've made zero and you still filed, they can still provide that tax compliance letter. But if there's no filings, they can't provide that. The alternative to the certificate of compliance is to provide an affidavit that says this is not a business asset, or this is less than a majority of the business asset. So if you have other business assets, and business assets can't be cash, but if you have other assets out there, then you're okay. No, they don't go by numbers. So for instance, if you have two houses and you're selling one, it doesn't necessarily say, you know, this is a majority of, I guess really a better example would be three houses and you have two, but those two are less than the value of that one that you're selling. It goes by fair market value. So again, that's where it's important to get back to that CPA and have them advise you as to whether this is really the last business asset.
Yeah, Robbie, this is great information. Can you answer questions for people if they want to get in touch with you, and take a moment just to explain a little bit about what all you do at your firm?
Absolutely. Yeah, we are more than welcome, more than willing to go ahead and assist with these questions, up to the point where we're not providing tax advice. We're not going to give you tax advice about specifics. We can walk you through the process. We won't give you specific tax advice because your CPA is going to be more knowledgeable about your particular situation. But we definitely want to have that conversation about these issues and what questions to ask that CPA. So we can certainly walk you through. Our law firm handles real estate transactions. We do residential, we do commercial, we do some estate planning, but the bulk of our business really centers around real estate closings.
Well, I appreciate that. And you can see here 843-553-9800, and you can find Robbie on extension 3029. Always a level head, plenty of experience working with him and his company, and just always have a great experience. Ask those hard questions up front and just organize the right way. It's just sometimes we get so busy, we don't mean to do it. But if you buy a property, keep your closing package, keep everything together. And then when you go to sell the next time, reach out to your CPA. If you have a tax attorney, reach out to your tax attorney, and certainly let your real estate attorney know what's going on, just so by the time you get to closing, you don't back yourself into a contract or a performance issue. And Robbie, thank you for your time. I really appreciate it.
Thank you. Absolutely. Absolutely. Appreciate you having me.
Thank you.